Okay. It's been a hot minute since I made one of these quick videos for you guys. Just gonna go over what changes I made, and explain why I did what I did. Otherwise, we look good and we're pretty exceptional as far as catching up. And there's a few things to look for. Uh, Obviously, R&D, we've got that locked down. They have a spreadsheet with the remainder of what we got going on here. Um, if anybody needs this, I'll send it out. But I think we just have another round left. So obviously, what we have input now, what next rounds will be, quick and easy. Marketing, I mean, this is subject to change, but this is basically trend line what we've been doing. Um, so you see in here matches what I have here, and that's solely based off of the report on the percentage sales here. I've been doing the sales growth based off of the sales we've done, and what we can do, our potential. It's obviously bid 2. We were just a production issue there, but I think we've got that under control. This part right here, market share report, tells you what we could sell and everything like that. Right now, like, we're beating everybody on the majority of areas. I think there's 1 or 2 product groups that we're not solely everywhere beating everybody. Erie came out of nowhere this last round to start kicking butt. But going through the numbers on what they're spending on HR and recruiting and TQM and basically everything else, I think they pulled the trigger too quickly on cutting costs and not investing in their production. For an example, TQM, they're pretty good on, but they're our major competitor, kind of holding us down. Everybody else were really outperforming. I think Chester decided to stop working. But Erie here, they're not putting any money into their production capacity. Going through their financial summary, their cash flows and stuff like that, and their balance sheet and income statement. Their income's phenomenal, beating everybody. But I mean, we're not too far behind. And this next round is where we'll make a lot of the cost cutting adjustments. Our liabilities, equity, our balance sheet isn't far off from where they're at. In addition to our change in net position, we're spending more. We're still ending up with more money. We're issuing more stock. They're not. So the market share is not going to go up. A lot of the back end stuff, the stuff that, depending on how they're weighting themselves, it's not really gonna help them out, and they're not really spending money on plant improvements. I mean, they are, but they don't have enough cash on hand from the previous rounds to make up for full production for it to be a major concern. Too short of a time span. Otherwise, if this were to go for another 8 rounds, we'd be going neck to neck with the Erie team. Is basically they're starting to get it together, but I think it's a little too late, and they're not spending money like we are where they need to as far as HR and stuff like that. So we're going to cut some costs there. I made changes in production, and it's only because we have our company's not infinite, and since it is only 8 rounds, we're going to be dirtbags and cut some corners here. I reduced the buy-sell capacity only to increase for the next round. So based off of my guesstimates here and then sprinkling on some more, That is what is here, and that it alone. And then I took the two highest margin producers, contribution and overall net margin, and we're going to increase those. So we're going to try to squeeze a little bit out of bead, and we're going to try to squeeze a little bit out of bid too. Bead here is price versus unit cost versus on the actual pro forma sheets. Bead and bid is going to be where we can make our most bang for our buck by increasing the automation rating. So that's where the remainder of our cash is going there. The next round we'll do nothing. None of this. We're putting zero money in this. I mean, we would if we were going to continue on, but we're not. So we're gonna maximize getting our income up, basically. It's the same with the pricing. I'm being less aggressive with the pricing as it goes on because our competitors aren't. We're still staying below, but we're not gonna rock the boat on that. Human resources, same thing's perfect. We need to max it. That's perfect. That's perfect. We'll go ahead and we will zero that out the next round though. But we are spending phenomenally more than our peers are. We don't need to next round. This round, yes, because it's pretty impressive right now, and I think there's only one group, if I remember correctly, that is doing better than us on HR on a passing glance. Yeah, that's Chesser. It's the one thing they're doing right. Everything else they're not doing phenomenally. I mean, they're needed compliments. Nothing. They're not really producing much. Kind of dropped out a bit. Now they are dropping some product, and it looks like they want to compete on these two here. They pulled out here, and stopped doing any work on cedar. We don't really see them being a threat. So this is good, and we should be good by the end of this year, and then after that we just pull the plug on HR. Finance, I know we had the little hiccup with put numbers in, and we don't want to do borrow current debt. So we're at max issue stock. We're not doing any long-term debt this time, and the reason being is that's to drive our stock price. Our projected stock price should be 47. I think we ended up at what was it? Not nearly what I wanted it to be when we ended it. So we closed at 27. So it closed at 27. Our market cap still good. Erie shot up, and this is because of their cost control and the way that they're running their overall business. And this is a concern for me. Everyone's trend lining down for the most part. Obviously, Andrews is going up, but you can only go up from the bottom. And we've had a steady growth. So this next round will be above where we started, and then we should be able to get the last round, squeeze everything out. If I'm understanding it correctly, and I mean we're in agreement everything. I can get this number up if we deem it. But if anybody watches this video and really wants us to increase it, leverage is the only thing I can increase, but only by 6. But it devalues our stock price by, I think, $2, the projected stock price, if sales go the way they're supposed to. So that's the only thing that we can really change, and that increases this just incrementally. But if it is something that we want to try to squeeze out, I can make it happen. This is the better route to go. And then last but not least, the TQM. I went in and changed that. So basically, all these numbers are based off of to get us to the remainder of the 4 million. So the last 2 rounds we did the 1.5, 1.5, and that first round we didn't have any money, so we barely, I think we did. And I went back and reviewed our previous financials and spending. We did a million here, a million here, spent nothing here, and then like 6, 7, 0, 900, 400, 900. So this is just to make up that remainder 400. To make, or the remainder of the 4 million. That 4 million on any given initiative, and after that, it's diminishing returns. So we're not gonna do any more with that. I mean, it allows you to squeeze out like a 1/5 of a percent. So we're going to do that. And it says threshold 500,000 on before initiative shows meaningful return. What we've already done the 1.5, 1.5. So it's cumulative. So it's a whole kit caboodle. So this will get us at 4 million for every return, and we're basically done at that. And these are the only issues really going to hurt us. There's been groups that have been able to spend the money that first round, and we didn't. This should cover everything. I did make these changes after you guys everybody got everything in. But other than that, we were good. It's just digging into the weeds on some of these just to tweak it just that much better. And then we had shaved this down. Man, it was just getting it, doing that legwork to get the right stuff. HR is good. Marketing was good. R&D was good. It's really just, I played with production, but it's solely due to the change of strategy, doing that forward look. Knowing, like, if we were doing a longer term project where this was a true business, then yes, the initial production numbers that were in here would have been correct. But because we are not, and it is a finite amount of time, I made the adjustments here to just get us copacetic with the next round's requirements, a little bit of a stretch goal on it, and then focus our money on here. Now the next round we should have, this number will actually be 80,000, and so we'd be able to expand even bigger. Basically squash our competitors. If this was like a true 16 weeks, or if our first beginning round, we would have been good. But I think this should tighten us up. We should know where we're landing at the end of the next round. I know our market capitalization and market share was a big deal. We should be looking at, with me issuing this amount of stocks at this price and this going up to 47, adding $20, our market cap should be pretty phenomenal. And then I will be able, obviously, to issue more stock at the tail end of the next round. So we'll be able to have more. I'm not issuing any dividends because of the way that the analytics go on this. It's because this is a real world. This is based just on algorithms and how everything will take. Dividends don't count unless you've shared them for 2 or more rounds. So even if I share them this round and next round, we don't see any result in driving up the market price until you get the average of those 2. So even with the one, they average this one and the prior one, I can issue a $5 earning per share, and it's not really gonna increase our stock price. I can actually show you. Just in case anyone was curious about that. No. Ratios. By the way, our net profit is phenomenal right now, and it will only improve. So you can see projected stock price doesn't change, and it's solely based off of this program here. Just in case anyone's curious as to why we're not issuing dividends, we would, in a normal business, be issuing dividends, but because we are attempting to game the system and work into the parameters that we have set, we are not issuing stock or not stock dividends. But we would, in real life, you would at this point be it wouldn't be 87%. We'd be realistically doing 250, or if we wanted to continue doing improvements, we would look more for the like 25% range on EPS, your dividends per share. So $1.50, even bigger corporations, you'd only look at like a 41% 41% dividend, or sorry, 41 cent, 40 cent, around that range. A lot lower percentage. You're talking the 5 and 8%. But that's because you're continuing to attempt to grow, which is what we would do. Anyways, if anyone has any questions, I don't work tomorrow, so I'll be able to make any adjustments. But I think for right now, we should be set on not touching anything, and then I will get with you guys on however we want to do our presentation. I know we're all chomping at the bits to get ahead of it, and it does seem a little intense for them to only give us like a week to get it done, even though we've been doing this whole time. But yeah, just let me know what we need.